Hi, I'm Michael. This is In Your Business. I have three great guests with me today. I'll let them introduce themselves and then we'll get right into it.
All right, so I'm Nancy Kowalik, Real Estate Group, your home sold guaranteed or I'll buy it.
I'm Gracia Cassidy. I'm the Executive Vice President at Fort Billings Credit Union, and I specialize in lending.
And I'm Sheri Bay, the CEO of Fort Billings Federal Credit Union.
The reason I have you guys on today is I felt like the housing market in particular is something that everybody has an interest in. Mm-hmm. Obviously, financing and financial stuff is something everybody should know. Yeah. And I thought there was a pretty nice synergy between what you do at Fort Billings and what Nancy does in real estate. So I'd like to start off with you, Nancy, and just ask you about what's the current real estate market like right now, and what are you seeing?
So the market is it's great if you're a seller. It's a little dicey if you're a buyer. So it really depends on what you're looking for. Sellers, you have to be priced right. Like the pie in the sky stuff anymore, the optimistic versus realistic pricing does not work, right? Buyers are looking for project-free homes. They do not want projects. So 85% of the people out there can only see what's literally in front of them. And I'm going to say 95% can't even use a paintbrush or a hammer. So, I mean, they asked me for a handyman just for hanging pictures and things like that. Yes, I saw the eyebrows go up and I do the same thing. So I'm like, listen, I took wallpaper off of 1 million houses as I was growing up from my parents. So it's one of those things. They're looking for project free. They want a finished basement. They want pools. They want, if they're a first time buyer, they want a house that's clean, maintained. They're looking for the safety of that first time house. So every price range is a little different, but they all want something fair. Sellers, of course, want to maximize their value, right? Whether if they're stepping up, a lot of them are step down, sellers. If they're, in the bigger homes and they're stepping down either to downsize or to leave our lovely state of New Jersey, right? So we have a lot of that going on. But project free is the name of the game. That's a big piece of it.
That makes a lot of sense.
Yeah.
And it is a little surprising for me, but it does make sense now that you say it that way. Yeah. And then how about on the banking side? What are you seeing as far as people coming in, and are they trying to refinance to buy a second home, or what are some of the things you're encountering at this point?
Well, we're seeing a lot of people coming in to do a lot of home improvements. For purchases, we do get our fair share, and I like the fact that we partner with State Financial Network. They are our mortgage partner, and we just launched a new program called Coffee, Knowledge of Financial Education, which helps the first-time home buyer. So we're helping first-time home buyers. They don't have to pay for that fee. There's a class they have to take. They don't have to pay for it. It goes through our website with Coffee. And then we partner with State Financial. They're all licensed mortgage officers, and they will help you and guide you to get pre-qualified. And the best part about it is you're going to work with the same loan officer from start to finish. We fund the loan, we own the loan, and it will come across my desk and my financial manager's desk for approval. So we are developing a relationship right with you. And if you already have an existing relationship with us, we're going to help you along the way.
That's awesome. And I actually have a question about that. So I've purchased homes, but how often do you see that people come to you and they're not even pre-qualified? And how important is that?
It's huge, right? So right now, one of the hottest properties in the market will not even let you see it without a pre-qualification. Right. Okay, so you can't even get in to see it. That's no nonsense. And think about it. A seller they spend sometimes 2 hours getting the right, marks for vacuuming and making sure everything's perfect. And if you're not qualified to buy that house, why should you be in there? And the other piece is if you fall in love with something, right? You fall in love with something. I had this happen to me years ago, a gentleman who was in sales and got bonus money, and his lender was not too savvy at the time and didn't ask all the right questions. He thought he could afford a $500,000 home when he finally got qualified. And of course, he fell in love with that home and the amenities. Then he gets qualified to do the loan, right? And finds out he can afford a house of about $375,000.
One of the things that I just heard about the pre-qualification, how important that is, being a seller. I guess one of the other questions that I have is, what's the advantage of being local? And I'm going to throw this back to you in a second, but I want to talk to you first. Knowing your loan officer, knowing the bank, being a community, small business type of situation, you're not a national branch. So why is that an advantage?
Well, we know our members and we're going to help them. if you call a larger institution, most likely you're going to be bounced around, and you're going to either talk to myself or my two other loan officers. We're all knowledgeable to help you and get you to the right loan officer up at State Financial. Now, State Financial only has 3 loan officers, so we all have a relationship with them. So you're going to get the help you need. You're not going to be waiting days or waiting forever for a call back. You're going to get it within 24 hours.
Plus, we're more like local. You're not getting someone that's in California processing your loan that knows nothing about properties in New Jersey.
That's true.
There's a
likely
huge
to-
difference.
Right.
Yeah.
That makes a lot of sense. And I think, Nancy, you go through the same thing too. Like if I'm looking for a realtor,
Yes.
right, and I go to Remax or Zillow, that's your best
Don't
friend.
get me started on that one. Don't get me started. That's a whole other,
I couldn't
whole
wait to throw that in
conversation.
there. I'm waiting all night for that, by the way. But why is it so important, though?
So
Like,
it's important. So as a listing agent, right? So when I get offers in and it comes from someplace like a Loan Depot or Rocket Mortgage, I know that, like just like you identified, you're not getting the same person on the phone every time. It's a 1-800 number or a 1-866 number, and it's whomever picks up the phone. There is no accountability, right? So if something goes sideways, right now, if I'm working with a local lender, someone that I know, I pick up the phone and say, "Yo, Ken, hey, Dave, what's going on here?" And they know that if they don't treat my clients right, I'm not recommending them again. Like their business depends on how they service my clients. That's a huge piece of it. And then as a listing agent, if I see a Loan Depot or a Rocket Mortgage, I say them specifically, they do a huge volume, but I've yet to have a good experience. Let me just put it that way. And I can say that unequivocally, right? And so my sellers will say, "Hey, Nancy, we have 16 offers here. What are your opinions of the sellers, or of the buyers rather?" And I will go through the qualifications. I do call lenders and say, "Have you vetted this client? Have you gone through, not just here's the things we need, but do you have all their documents? And how far into underwriting are you, right? Or is some people are qualified right up to, we just need the appraisal for the house, or gee, we've had a conversation," and everybody has a different way to process it. I want to know that they've turned in all their documents and that they're qualified for that house, because I've seen things go sideways last minute. And listen, if you have 16 offers and something goes sideways with the loan, those other 15 offers may not be there when that happens. So that time is of the essence with figuring it out. So the local person, I will say to my sellers over and over again, this one works with a company that I'm familiar with, that I have confidence in. These companies, do your own research. I will tell you, I've not had the best experiences, and you can look them up, and there's the reviews are there. And so that makes a difference in whether you're getting accepted or not.
I think too, like as local as we are, like really like Gibbstown, say, a lot of people buying homes in Gibbstown require flood insurance, and that's kind of something like
huge.
up front.
Yeah.
So, I know when I bought my first house in Gibbstown, I had just come home from delivering a baby and was told in the hospital, "Oh yeah, by the way, you have to come to a settlement with flood insurance." So I was on the phone the day before I went to settlement trying to buy flood insurance. So.
wow. So knowing your area is very
very
important.
Yeah.
Yeah, and I think that's the other part of this. Like, set aside the financial side of that.
Yeah.
Like coming to a realtor, like your name's on the wall,
Right.
unlike like a Remax or a Keller Williams or something like that. Like, how important is that, and why does that make a difference?
It's in my opinion, it's very important, right? So I started and grew up in the Century 21s and the KWs, and I realized that in order to do things, the buck stops with me, not with my manager. And for me, with my name on the door, anything happens, they're looking directly. My agents are looking at me, my clients are looking at me, and it's not some big conglomerate. Listen, the EXP office, you know where their office is? It's in Montclair, New Jersey. That's pretty far away. And to get that broker on the phone, it's not always an easy thing. I've had those experiences. You get me on the phone, someone calls, I'm guaranteed to call within 24 hours, generally the same day unless it's late at night, right? So,
Right.
And I'm always returning those calls because, again, it's my name on the door. And I'm looking for the 5-star reviews. Happy clients refer happy clients,
Right. Yeah.
Exactly.
That's a huge thing.
That's
go
what
ahead.
I like about State Financial Network. I am in close contact with the mortgage officers up there. So if any of my members, if for some reason can't get through to them, which is rare, they'll reach out to me and I'll get them that answer because we're so close and we work together. And something may not go right the first time, and they might say, "Hey, Gracia, if this member does this, are you willing to accept that mortgage?" And, that's another important reason to have that relationship, because I'll make an exception. Yeah, well, let's do it. Let's do it for them and get them. Just had an example of that this Friday. A member closed. First, he didn't meet qualifying guidelines, and they explained to him what to do. And they said, "Will you keep it if he puts a little more down?" So it worked out. He went to closing. Everything was fine.
While we're on the topic of things like about we've started this
Yeah.
community and like how you're localized and how important that is. The other thing that I think is a common thread between your businesses, just so you know, is you both do so much for the local community. Like you guys get involved in so many different things. And why do you think that's important?
Listen, so if those with responsibility, like you're supposed to give back. In my opinion, I've grown up, whether it was Girl Scouts, church, it didn't matter. You were always of service to people, right? And in the community, as soon as I've been doing this for so long, I just kind of went public with it about 6 years ago because I was hoping to inspire people, not to say, hey, look at me,
Right.
but and I was given a philanthropy award and they kind of surprised me. It was lovely because I'd been doing it for so long, but I believe this is our community and there are people in need and it shouldn't fall to the government. It should fall to those who can say, look, I can put my hands on, if I've walked into a house and I've seen someone sleeping on bare mattresses and I've seen things that heartbreaking in an area of $500,000 homes and everybody's keeping up appearances and no one sees what these kids are dealing with, and my team and I are out there getting gift cards and getting things saying, hey, this came from the church, right? Because they don't want to accept something,
Right.
but
Right.
it's quiet and it's private, but these are the things that we've always just done as a matter of course. The church calls us, the school will call us, the school nurse will say, hey, look, this kid hasn't had money for this, hasn't had, money for school lunches, hasn't had things. They'll call me and say, look, we've reached out to other things. Can you fill that gap? Because there's always people falling through the gap. Right. And, I grew up in a time that wasn't ideal for me. And there were lots of things that fell through the gap. And I did have family members extended that reached out and helped me. So it becomes a responsibility of the community. And that's just how I grew up. And I really instilled that in my kids. And that's part of the culture of where I work. Everybody believes in that and does.
You do a lot of local business stuff too. I mean, bringing up other companies,
Yes.
like she'll go and visit, spotlight them, talk about what they do well, and nobody's telling her to do that, and I can brag a little bit for you because it's really cool. Like, goes in other spots, and you're a vice president of the chamber here. Like, I know you're
Yes.
very involved in the community, members of the community. Like, why is that so important?
Well, the credit union philosophy is about people helping people. So we want to help people and I want to help them build their credit. I'll work with you. You come into us with maybe not so good credit, but I'm going to tell you how to get there. And so are my other loan officers. And that's what it's about, developing that relationship. Because if I help you get your first credit card or your car, then I want to get your mortgage. I want you to stay with us. And then I want your children. I've been working at the credit union for 32 years now. So I've seen children that were 5 years old. I gave them their first credit card, gave them their car loans. I love it. And that's what we're about. It's a relationship. And I want to continue that.
And to Gracia's credit, she really, really is one of a kind. She knows her stuff. Of course, we have guidelines that we have to go by.
Sure.
Yes.
But she is able to literally customize and kind of work and tweak things so that it still falls within the guidelines that we have to go by, but she might be able to cut somebody a break that they may not have gotten in a cookie cutter bank situation.
Right. Yeah, and you guys actually listen to what they're trying to do and help them get there. And it might not be today. You might have to tell them it's a tomorrow thing, right? But you can help them get there in the right way.
Yeah.
Exactly.
That makes a lot of sense.
Just a quick example. I had members years ago that came in for a car loan. Okay, never had a loan with me, and their credit scores were in the 500s. So, all right, we all know that's not so great. But I sat and talked to them. I said, look, you do this for me. I'm going to give you the loan. And after a year, if you pay on it well, don't miss a payment, I'll change the rate for you. And I did. And to make a long story short, they have gotten visas with me. They have their mortgage with me. It's just great, and they got credit scores now that are very high in the 800s. So I'm happy, and that's what it's all about.
Yeah, I love that. And to that point, like since we're talking about financial, I'm going to throw it back to you again. What are some things that, as a homeowner now, if I'm thinking about buying, like what are good investments to make in my home?
Easy things. Paint is a huge thing. Making sure everything's clean, meticulous, right? Go outside your front door. Everybody goes in my area, right through their side garage. I walk up to the front door and I'm like, have you been out here lately? Right? Simple power washing.
I'm guilty.
So listen, we're all guilty of that to some degree. There's dead flowers or a bird made a nest above the door, whatever it is. So, but maintenance items for sure. But paint is the cheapest ROI there is, right? Paint changes the warmth of a house, right? So the definition of a sale is a transfer of warmth from one person to another.
Interesting.
So if you walk into a house and it feels cold, right? I'll walk into that builder's grade white, right? It's that glaring cold feeling. You walk into something that has warmth. So I have 2 colors that I use religiously. And I go, Sherwin-Williams, Agreeable Gray, or Tony Taupe. Here's the color palette, right? And it's warm and it's flat. And a $60 or $80 gallon of paint can transform an entryway tremendously, right? So little things like that. I mean, I walked into one house probably about 5 years ago, and they were like, we just did all new carpet. We paid for all the upgraded pen, and we spent $20,000 on white carpet. White.
Wow.
And I'm like, this is a family house. No one wants that
nobody
white
with
carpet.
kids.
Now with
And I was
kids
like,
and dogs.
No.
and I was like, I hope you enjoy it because you're not getting your money back on this one, right?
Okay.
So, but I've walked into houses like, look, you have 3 different colors for appliances. There's the sales coming up. Go get stainless steel appliances because that'll change the ROI. If you spend, $3,500, you're going to make another 10 or 12,000 because that's what's expected in this price range, right? There's certain amenities that are expected within a price range. Sometimes it's granite countertops, very inexpensive. If you go, I got a guy, go to the right place. Right? You go to the right place and get something. I say I'm from Jersey. I got a guy for everything, right? I know where to find things, and so it makes a difference. I'll tell you. And so just coming into a house. Listen, I went to sell my house. I built it for almost $500,000 at a time when everything was going through the roof. And so I didn't get granite because they wanted $14,000 for granite. Wow. I was like, oh, so I went to go sell it and I still had linoleum countertops. I went to go sell it and I had linoleum floors and I had room that had carpet. I said, I'm going to spend $8,000. I put granite in, I put tile in, and I put hardwood floors in for $8,000. And it made me an extra $50. In that price range, that's what was required in those homes. I was not selling it that way, right? Because again, people will look at it and go, that's $25,000 for granite. No. It's a lot less if you know where to go. A good local realtor will say, in this price range, $300 to $450 or $350 to $450, here's what you can expect in a house. $500 to $700, here's what you can expect from a house. Everybody is HGTV. We're all, we all live by that now.
Right.
And everybody wants stainless steel granite countertops for $150,000. And it's like, okay, it's not realistic. We educate the buyers. But for sellers, if this is what you're selling, this is what you need. And I can say, and for me, it has to be at least a 2-to-1 return on investment. I often go for 3-to-1, and then there's just non-negotiables. Like, look, if the roof's leaking, it's got to be fixed. If there's, if there's issues in the basement, we're fixing those things. Things that are material defects, they have to be fixed. Right. So that goes without saying. But there's certain things that you can put in amenity-wise. Not a lot of money. That's going to give you a good ROI.
Awesome. And then if you know that, how do you get money? Like, how do we go about that? Like, what do you think the best approach there would be? I'm coming to you.
Okay.
I want to invest in my house. I've been there 10 years, let's say, and I'm thinking about selling.
Well, if you don't really have the money up front, but you have the value in your home, you could do like a home equity, and we could do a home equity for you, get you through that, and then of course that would have to be paid off when the home's sold, but it's kind of a short-term quick fix. If you don't have the money up front to do all those
or stopgap. And if you're saying if Nancy's saying it's a 2-to-1, maybe 3-to-1 ROI,
right. So if you have to put 10, 15,000 into the home, but it's going to get you 30 back,
It's definitely
even
worth
20, then
or it makes a difference between selling and not selling. There are certain things you have to do because people are not coming in the door. And I've had this experience, like the mauve carpet. Like, I've had houses, the entire house is magnificent. The big great room that is stunning visually, mauve carpet. And I'm like, you have to change it. No. And so I say it up front. I repeat it, I reiterate it. People say, oh, there were some updates. I'm like, here's the only thing that's dated in your house. Finally changed the carpet, sold it 10 days later, right? After being on the market for 5.5 months.
Oh, wow.
5.5 months of paying the mortgage and the insurance, and the taxes. House is not worth more, but they sold it. But they could have sold it 5.5 months sooner if they had just changed the carpet. Like little things like that, because people can't see what's not in front of them.
The house that I'm in now, when I bought it, it had the shag, I called it the Brady Bunch carpet.
Yes.
So, but the generations today, they want everything like,
well, they don't know
Perfect.
how to fix.
Yeah, they don't.
They don't know who to go to.
Yeah.
And they're spending every last penny on the house.
Right.
So then they're going to have to live with
So if
whatever
they're
they're
house
getting.
poor, then they need to.
Can you describe what is house poor mean? Because I think that's a good term that
So
a lot of people aren't.
They're just maxed out with their mortgage and their insurances and their there's not a lot of room there for savings.
Any extra expenses?
Improvements to the home,
Right.
So I can understand why they want to have everything just perfect when they move in.
But let's be real.
I mean, that's not how.
Yeah.
It's not so. It's funny because I have an aunt and uncle that I'm really close with. They're in Metuchen. Their house is meticulous. Like, it's awesome. So I bought my first house down here in Mullock Hill. It was a little bit of a fixer. And I moved in, and I was moving from a 1-bedroom condo that was maybe 500 square feet to a house that was about 2,400 square feet. Well, I thought that I needed to have that house ready to go, like, immediately. Like, it's one of those things where, because that's how we've become
That's another
oriented.
mentality.
It is, right?
Yeah.
But my aunt, so I was kind of like, talking to her about it. And she goes, Nance, for the first 5 years, we had lawn chairs and we ate on moving to, like, we did this gradually and slowly.
Yes,
We've been in this house now for 45 years. Like, they've stayed, it's a beautiful house, but they're like, we lived on, garden furniture
Yeah.
for 5 years
Yeah.
because
Right.
we couldn't afford things. We did them piece by piece, but now people walk in. I've had people in the $150,000 price range, and they're like, "Oh, we're getting it painted before you move in." I'm like, "You're getting it painted before you move in?" Like, they're paying someone to come in and physically paint it for them. I'm like,
Yeah.
Where
like,
we would have done
and
that ourselves.
right,
Yeah.
right. And so it is a generational thing, because they just see the end result,
Right.
And they see it on HGTV, and they see it. So that culture of now, how about now? What about now? Right? That's what we're dealing with,
Yeah.
and that buyer is conditioned that way, and it's
Right.
not their fault. That's just what their expectation is.
Yeah. But again, it's the influence of like the HGTVs
It is.
and the
It changed our business drastically.
yeah.
But
That
for,
makes sense.
for those that would need a home equity loan that would come in, what I like about our products are it's not going to take you weeks to get it. It's going to maybe 2 weeks tops. Sometimes I can even get it done faster. And that's what I pride our loan officers about in my loan department, because some people need that rather quickly, especially if they want to sell and they're on a timeline. We can hopefully get you done within 2 weeks, which is, if I'm finding out from other institutions, a lot of it don't move along that fast with a home equity loan to get you from time application to settlement. So we can help you there too, and we'll guide you in what to do. It's a really easy process.
And you have to do that before you put your house on
Yeah,
the market.
you
Because
do.
you will
You
not get a
really-
HELOC or a home equity line of credit with your house on the market.
You're right, because of the contract. You're absolutely
Right?
right.
So I've had people, I walk in, they're ready to go, and they'll sign contracts that weekend, and then I tell them, here's the things you need to do, and they're like, oh dear. Then all of a sudden we're canceling that contract because they have to go get a home equity line of credit. We back up a month to get things done. So it's, for those that are planners, it's great, but less than 20% of the population are real planners in that kind of
Yeah,
direction,
yeah.
right? So it comes down to, we're going to just take a step back, take the house off the market, get your home equity line of credit, get you up and running, and then you're going to run quicker. That prep
Right,
time will get you
exactly.
running quicker.
Yeah.
That makes sense.
Yeah.
One thing that I wanted to say was that not only, what's the old, remember that commercial with the guy? I think it was Rogaine. He goes, I'm not only a owner, but I'm
That's
also
right.
a client.
That's right.
Yeah.
I'm a client of both of yours.
club's
And,
right.
You know,
Yeah.
I bought my house from Nancy. Well, you were
With me, yeah.
you guys were the my agent.
Yes.
So it was a different listing agent, but I looked at 1 million homes with your company. I refinanced my home equity line with them and my car loan at the same time. And
Thank
I'm
you.
not,
Thank you,
no
yeah.
bullshit. It was the easiest thing I've ever done. Like, and I'm not even joking. Like,
That's awesome.
and I'm not saying that because we're doing this. Like,
I
I think
know.
I've said that to you guys
Yes,
several
you
times.
have.
Every time
You've
I come
told
in the
us.
door, I go, this was the easiest thing I ever did. Like, it literally was easy. And that's not easy to do. Anybody who's ever borrowed anything or gone through that process,
Yeah.
and I've done it several times, that was one of the smoothest things. And then with you, I think I had your agent in every town. We looked at every house. And I'm not going to say why, but she's not here right now. But it was also me too. I'm a diva when it comes to things. So I was very particular, you know.
Yes.
But like finally got in, and we got in at a really weird time. Like we got in right before COVID.
Right.
You know, so back to that whole like customer service, like having that, like I am a client and always will be because of that, you know. And we were supposed to have Stevie here tonight. We'll talk about that another time. But also a client of mine, but also I'm a client of yours, you know. So that's what's really cool and fun with all of this is like you can actually speak about it real. Like there's no
Right.
like we're not being like, and I hope nobody thinks this is salesy because it's not.
It's not.
You know.
No, it's just honest and
It's honest.
It's good
and-
customer service that you want to highlight, which I love and talk
Yeah.
about.
Yeah.
Right? Talk about the expertise.
You
well, I think
know?
we're all seasoned in what we do. Like
Yes.
you know, I'm 34 years, she's 32.
I've been doing this for 20 years
So
in
Yeah.
real estate.
Yeah.
Yeah.
Yeah, and I mean Nancy has a marketing background too, which is crazy.
Oh, that's awesome.
And
That's awesome.
but also like as you see, like it really worked, you know, and like that's
Exactly.
you know, that's a really big component of this. But knowing that and how successful you are, like what are some of the other products that you had to evolve into? Like you don't just list homes. Like what is all like?
No.
You know.
So, and it's funny. So I like to say I'm a marketing company that sells real estate, right? Because marketing is creating demand for the houses, something no one else talks about in our industry, and it's necessary. But we buy houses, we flip houses, we help. I have rentals. I'm a landlord, right? So I've been through this process. When people come to me and ask me, hey, how do I create generational wealth? This is how I'm doing it. This is how other experts are doing it, right? That's super important to me. But why sell your house to buy the next house? Can we keep somebody in it? Can we keep it rented and have you move on? And they're like, I never thought about that. It's so cool. I work with flippers that will use the equity in your home and make more money. I work with real estate investment trusts who will buy your home. We agree to a scope of things to correct in that home. We take the money out of the equity in the home. We make the improvements to the home, put it back on the market, and you get the money that a flipper would have gotten, which is pretty cool. And there's a fee for it, of course. It's 6%. But to be able to have somebody walk away with an additional $108,000, which is one of the things that happened recently, that equity would have been in a flipper's pocket. Instead, it's life-changing. We see so many divorces where there's deferred maintenance and things that didn't happen, but they have at least 65% equity in the house. We can work with them and have someone, they purchase the home, the real estate investment trust, they'll purchase the home. We give them 65% of the equity. We get them out of the house. They purchase something else. We agree to a scope of work, whether it's $25,000 or $40,000. Seller and the REIT agrees. I'm generally the one going in. Here's the improvements we need to make. Contractors give me estimates. They compete for the business. We make the improvements. The house is empty. We make the improvements. We get someone in to stage it. If it's a certain price range, you have to have that. Put it back on the market. And now whatever that house sells for, you're getting the money after the improvements are made. Like it's a huge deal. It's life-changing money. And I've gone through this with at least 7 or 8 families. So instead of a local flipper walking away with another $100,000, which listen, they have a right to do. And there's a place for it. There's some people that just really need cash to get out. But if you can hold on to that equity, it's life-changing for your family. And so we are the only ones in this area doing that. There's 14 of us across the country doing this, working with these REITs. It's something that we developed ourselves.
Yeah, it is.
Well,
And you
some
can
of
tell-
these. Oh, sorry.
Go ahead. Yeah, go ahead.
No, some of the flippers though you find around here are like they're not even from.
No.
Like the house my son bought, the flipper was from New York.
That's very
remember
common
that.
now.
It's very common.
Yeah.
And they went to settlement and nobody showed up.
Yes. Very
And so
common.
they had to reschedule.
And the work is shoddy,
Yeah.
and not in all cases. I work with a couple local guys that do an amazing job, and there's a place for that. I had one family who called me on a Saturday morning and said, "Look, I need this house sold in 2 hours because I need to buy a condo. We'll lose it if we have to be contingent. My wife has cancer. I want her near family. This house, they were improving this house. They literally had half of it ripped apart. They had nowhere else to go. So the only thing we could do was a local flipper. I came in and they said, if you can get me $200,000, we can do this. I got them $220,000 from that flipper. And they were able to purchase another home that afternoon. Wow. And they were in it within 3 weeks. And she was able to start chemo in a house without fungus, without mold, without all of these things that this house had, right?
Wow.
And those flippers made $125,000 in the end. But they literally, we went in, we shook hands, they stuck to their word, they did an amazing job. So there's a place for all of it. It's just having the right professionals that will follow through. Because a lot of people will say one thing and do another. Because there's a lot of them out there. The flippers will say, I'll give you $500,000, and after they do their inspections and all the other things, it's $400,000, or it's some other. Like my sister went through it. So these are people I know, like, and trust, that I can say, I know that they're going to deliver on what they promise you, and there's a place for all of it out there. It's just having. So I'm very lucky to be able to offer the gamut of just about everything out there.
Awesome.
Yeah.
I mean, I think that's really special. And then back to your services again, knowing your people that are coming in. It's really important. So if I'm somebody that comes to you and which I did, can you tell me like what's like good debt versus like bad debt? Like if I'm like thinking about upgrading things, but all I have is a credit card, like what are some options that I have there? Like if I'm going to put, $10,000 on my credit card to do my bathroom, like good idea, bad idea? Like what's...
Well, of course, I'm going to steer you in the role of a home equity. I want you to get that product if you have it. But if you don't, our credit cards are another good option, because I'll try to get you into ours because our rates are low. They're lower than what's out there on the market right now. I got to tell you, we offer starting at 9.99 up, and our highest rate is 13.90. Okay, I'm going to steer you in that direction to come with us. But I'm going to first go and try to see if you have the equity, because I'm going to sit down and figure out what's best to do for you. Like Nancy is, she's going to follow through, and I'm going to try to help you the best way I can to get you in the right product for you.
Yeah.
And, I'm not going to try to sell you extra type of insurance if you don't need it. We offer, things like that. But like, I'm here to help you, and I want you to stay with us. But if I can't help you, I'm going to be honest and tell you too. And even if I have to suggest another local institution, I will.
I thought that was pretty fascinating too. Like, you're members of the chamber and there's
Yes.
other banks that you work with. So, and and I'm sure you have to work with other realtors from time to time. So your whole thing is, as long as it's the best thing for the people that you're helping, that's what matters, right?
That's right.
So,
Yeah.
So if someone comes in for a commercial property and they want to invest, we don't do that. But I will send them down to the local bank down the street who I'm with Sandy Quinn. She's the branch manager there of Century Savings. I will send them down to see her, where she has in turn sent people to see me for our personal loans or visas or car loans. So we try to help each other because we're all about community and people helping people.
Exactly.
So we offer a fixed HELOC product. It's very unique. It's a fixed rate line of credit. We offer a 10-year and a 15-year home equity line of credit. 10-year has a 2-year draw period, and a 15-year has a 4-year draw period. The rate is fixed. It will never change. So in a rising rate environment and you're locked in at a lower rate, it's not going to change. You don't have to pay a fee for it to lock it in at a rate. It's when you apply for it, that's the rate you get for the life of the loan. Sort of like having a credit card. If you have a $10,000 limit and you only charge $5,000, that's what your payment is based on. And if you take a draw period, we'll readjust the payment. If you take a draw during the draw period and up your loan balance, we will adjust the payment so it's still paid off in that time frame. It's a very unique product. It's open-ended. Of course, no prepayment penalties in New Jersey. So
And we tried a variable rate product.
does
and
not work.
I think we only got two.
Yeah, I think so.
Yeah, it's in this area. It's not a popular product. People like their fixed rates.
Yes.
Oh, yeah.
Yeah.
I mean, I love that.
Yeah.
I want to know exactly what I'm doing.
Yeah.
Exactly.
And we kind of said, oh, I don't know if this is going to work, and we didn't get any takers, so
Stuck with the
we
fix.
stuck with
Stuck
it.
with the
Yeah.
fix.
That makes sense. And then recently too, you guys have gone from, just credit union that you had to be referral based. What's the new?
Seg-based
Yeah. What's the new
to-
criteria now?
So we're now community based. So anybody that lives within the Gloucester County area can join the credit union. We used to be what they call seg-based, select employee group.
Right.
So only employees and their families of particular employers could join. Well, now anyone in Gloucester County is eligible to join us. So we can offer a lot more products and services to a lot more people.
Right. That's a recent announcement, which is
That's
cool.
nice.
And
Yeah. That was as of
it
May.
really opens you guys up to some new clients, but yet still local. Like, it's still
Yeah,
community
Exactly.
we're
based.
still local and
Yeah.
community based.
Yeah, really awesome. And then how about you? Like, what areas do you service? Like, what are you seeing right now in that? Like, where's most of your listings at the moment? Like, what are some of the hot spots?
Sure. So listen, Mullica Hill, I'm in Mullica Hill, right? So Mullica Hill is the center of my universe,
Yeah.
and I do a lot of business there, but I do a lot of business with people that want to move to Mullica Hill, right? So if you're moving up, I say, if you buy this home with me, I will sell your home, right? Or I'll buy your home for cash, make you non-contingent. And they're coming from Cherry Hill, especially, to be here. They want to have more space. They don't want to be as congested. They're coming from Philadelphia, especially. Like, they're coming from North Jersey to come to this area. So all over. I service, my specialty is Gloucester County, Camden County. I do some Salem County and Cumberland County. I get pulled to the shore a lot. I've been told realtors at the shore are not always as aggressive as I am. so I get pulled down there a lot to get homes sold, right? And so I listen, a drive to the shore, I'm all about it. Like, I'm there, right? But these are areas that we know really well. Will I go further? I do go up into Burlington County on occasion. I get pulled up some homes on the water and things like that, but I don't like to go much above that. I am up in Mercer County. I have family up in that area, so I will do, and we kick butt up there. But I want it to be in something that my agents can get to and I can get to comfortably. And here's the thing too. If you're selling everywhere, it's impossible to know the neighborhoods. It's impossible to know the traffic patterns. It's impossible to know the local officials. And so I really like to work within those communities that I understand.
Yep.
And if I don't, I mean, when I first started working up in Mercer County, I spent some time up there. I spent up some time learning the local officials, spending time bringing donuts and making friends, and just kind of learning how, because every municipality is different with their timing and who's in and how they function. And so kind of learning those things makes things a lot easier, right, in that selling process, right? Someone's in once a week, like in Salem County, the municipal local, if you want a certificate of occupancy, they're open once a week to make those, to make those inspections. But you need to know those things, right? Hopefully it's not last minute, but things happen. So we really try and specialize. I call it South Jersey, but really Camden County South is more of our specialized area, and we'll go a little further north as necessary. Yeah.
And then how's the market at the moment as far as like, what are you seeing? Like, are prices staying the same? Like, what's your prediction for the next couple months?
So I will tell you, for the last 2.5 years, everybody said the rates were coming down. They're not coming down. Like, this is the new normal. People have finally started going, I'm going to get rid of my 3% interest rate or 2% interest rate. I'm going to have to downsize because I'm tired of, living with that. But houses that are priced right are selling. But I will tell you, so I do open houses. I do this really cool 1-hour open house on the weekends, and we kind of bombard the marketplace and bring as many people in as possible. So at an open house, I might have 50 families come through, which is like 150 people in an hour and a half. Wow. So a lot of people. And I used to get, 50, 60 offers, which is pretty damn good. Now we're getting less than 10. Right? Really? And I've even had one instance where I literally had 58 families through and I got one offer. And I was like, holy heck, how does that happen? Right? People are cautious. People are scared. When they're scared, what is the confused mind? Does nothing. Right? So it's about pricing right, being realistic. I have very candid conversations with my sellers. Hey, here's a range. And I think at this range, realistic versus optimistic, we're going to get more offers. Some of them want to push the envelope and go a little higher, but you've got to be realistic, right? And we adjust quickly. So you have to be able to read the market. Homes are selling. The interesting thing is that back in 2008, like everybody saw everything crash. And that was when they were building 400 homes at a time. Every subdivision was 350 homes, 400 homes. In this area of the country was the fastest growing country on the eastern seaboard, literally. Yeah. And so when everything crashed, all of these homes went into foreclosure or weren't built, and it was amazing. And that because they were building so much. People are like, I'm waiting to tell my kid to buy a house until that happens again. I'm like, here's the thing, it's not happening. They're building, if you see new construction, it's 10 homes, it's 12 homes. It's not 50 homes. It's definitely not 400 homes. Right. And kids, the average age of the first time buyer used to be 28. Now it's 38.
Wow, really?
Yeah, it is. Right. And so that average,
because I have a 38-year-old that literally just bought a house.
Yeah, so that's literally the average age. And these kids are tired of living in the basements, tired of like renting. And so they're finally dipping their toes in because again, rates are not coming down that much. And wow, the prices, we keep being told the prices are coming down, but they're not. And we keep, year over year. Yeah. I had someone 2 years ago that bought a house. They sold it with the equity that they bought in it. They got $80,000 worth of equity and bought the next level house for themselves within 2 years. Profit after all expenses were paid and commissions were paid. So it's not going down. They're not building enough houses around here to keep up. Now, in Florida, totally different situation. But in New Jersey, where we are, there's not enough houses for the people wanting them. Wow. When you have that many people coming to an open house, you can sell a house to one person. Right? Yeah. And that's it. And so if we have 58 families at an open house, we sell it to one, that's 57 still looking. Just there. Right? Yeah. And that's not changing.
That's a lot of people.
It is. It is.
And I guess the other question I have then is, you really just hit something there with 38 being the average age
first time buyer.
So what do you recommend to like the people in their 20s right now?
Buy now. Because it's not going.
Rent? Like what? Like,
here's the thing. Don't rent. And I've even said this to my kids. I just helped my daughter buy her first house, right? And she's 28. Because I'm like, and when you are renting, you are paying someone else's mortgage. Right. You just are. It's a matter of fact. There are so many ways as a young person to buy a house. Now, yes, your credit plays an integral part of that. But if you've got a couple of lines of credit out there, you've got some credit cards that put something on it, pay it off monthly, or just keep a small something on it. You want to keep a small credit balance on it, right? So you have a car loan, you have other things that you're paying regularly. You have something going on there. If you're a first-time buyer, you can get a $10,000 grant from New Jersey State, and that doesn't have to be paid back. If you are a first-time generational, so a lot of people, I say, if they're renting. Why are you renting? Well, my family's always rented. Oh, really? So if you're renting and your family's always rented, there's another $7,000 we can get them in grants. So it's heritage money. Now that one, if you leave in less than 5 years or sell in less than 5 years, you might have to pay that off, and it's prorated. but $17,000 to buy a house, right?
Did you know
So
No, I did not know
Right.
that. I ain't getting educated here.
and that's just like so if your parents owned a house, it's 10,000. But there's also something called seller's concessions, right? So if a house, you're able to use the equity to help pay for something. So you're taking the equity of a seller and asking, you maybe overpaying a little bit as long as the house appraises and using that money to close. But if you should be paying your own mortgage, and the sooner you do it,
the better.
because you are creating generational wealth for yourself. Right. You do not get an interest. They want to change it, but you do not get an interest deduction for rent. That's money that goes out the door that you don't see any benefit from, except you have a roof over your head. If you have a house, you're getting deductions for the mortgage interest, right? You're able to make improvements to that house, and it's accruing. You're accruing equity in that house, right, and you're accruing growth. And even if it's, listen, right now you're seeing 7 or 8% growth year over year in some areas. Some it's 1 or 2%. Or you could be paying someone else's mortgage, growing at those rates.
Better than the savings account.
Yeah. It is way better than
the
a
amount of money
savings
that
account.
rent is today.
That's what I was just getting ready to say.
Sometimes your mortgage could be a little
Less.
less than what the rent is.
When I advertise some of my homes under a certain price range, I say this is the monthly payment, right? Because a lot of people, when you go to buy your first car, it's not about how much the car is; it's what's your monthly payment.
Right, exactly.
So we talk about if the house is under $300,000, here's your monthly payment with taxes, principal, and interest. Yeah. This is what that looks like, and it's like, oh man, this house I get for $2,400, I'm paying $2,500 in rent.
Right, exactly.
And then so there's a huge benefit. And I've talked to my kids about this. My daughter from a very young age, she's like, oh, I'm buying a house and I'm renting out all the rooms. And P.S. that was her first house. She's got roommates, right? Smartest thing, and it's like. Because now she's setting herself up for life, right? And helping, and I was part of that. So,
I have a nephew that did that too. Bought a house
huge.
and he rents a couple rooms out. Yeah,
but it's education. They need to be educated. So, and you can tell Nancy, you educate. I can tell, and you're passionate about it, and that's what we try to do is educate.
Education.
And that's why we have that on our website, that knowledge of financial education at Coffee. There's so much wealth of information on that, and it's free. You can get on our website.
It's not just for buying a house.
No,
it's for paying
budgeting,
your bills, budgeting.
We love to
retirement planning. Planning for your children's education.
Christmas presents.
Yeah.
Seriously. You guys have a holiday. They have all kinds of programs.
We have vacation loans. We have holiday.
It's pretty wild. And I think that's what my next question, kind of off of that is if the average homeowner or purchaser's getting in that 30 range, 38, what do you recommend somebody to start? Like if you just get out of college, like some of our staff, like they just graduated,
student loans,
right?
so they have a mortgage.
Right.
Already.
Yeah, they already have a mortgage loan. Taxes are so high. Maybe you're not making 75, 100,000 yet, but is that still possible? And what's a trajectory that you should see and start thinking about that? Like how much should you start thinking like, oh, I can afford something? Or
I think that's difficult because when you go into the situation where somebody's coming out of college and they have all that debt and they're not really making the income to afford a house, they're still living at home.
Right.
My advice to them is don't be so much in a hurry to get out of your parents' house. Stay there, pay down your student loans, save money. Your mom and dad will feed you.
Hopefully.
And clothe you. Hopefully. But that's what I did with one of my kids.
Yeah, work on paying your debt down. That's what we'll tell them. Work on paying your debt down, and we have to educate them. It's education. They have to learn to put money aside. I even tell you, I don't care if it's $5. Save something. And then if I have to have a credit card, I want them to build their credit, and I'll tell them charge $25. Go to McDonald's, get something to eat, but pay it off as soon as that bill comes in, and just start building that credit. But try to pay down that debt.
I think that's a challenge for a lot of people, though, right? Because once you see it, it's almost like it's free money, right? You think to yourself, like, well, I got $1,000 limit,
right?
And I pay it, and then they don't realize that at 23.9% interest or 32% sometimes.
And there's, again, just like the HGTV factors into, the ideals of what people want in a house, and I always say this, and I always blame the Kardashians for everything because everybody, they want everything now. They have to have the hair, the nails, the car, the clothes. And I said this in a previous thing, sometimes you have to tell yourself no. You don't need everything all the time.
That's true.
Tell yourself no. And put that $10 away or that $20 or, put it away.
Okay, I have one
Save it
more
for
for you
rainy
too.
day.
Okay.
The common term, especially when you're going to buy, right? It's debt to income ratio.
Yes.
What does that mean? And what should people be looking for? And like, how important is that? Obviously, you're shaking your head. You agree already.
Yes.
So explain what it is and what we should be doing there.
Well, a lender is going to look at debt to income ratio. And what it is your gross monthly income against your monthly debt. We take that and divide it, and there's a guideline. Different institutions use different guidelines. In our institution, it's 45% or less. So you want to keep your debts low. We're taking your gross income, and that's before taxes, because I'm finding out, again, people, younger people in their 20s, they don't know the difference between net and gross. You ask them, and they're like, "Oh, I bring home $2,000 a month." I'm like, "But that's not your gross, okay?" I said, "What do you get before taxes?" So it's fun to educate them, because a lot of them don't know. And this is what I like about us seeing everybody as individuals. A lot of people apply online for loans. They don't know what they're putting in. They're putting this as their gross monthly income. I'm looking at their pay stub. I'm like, no, they don't know. Come in and see me. Let me help you. And then the debt to income ratio, I say, okay, you got this, and this. We got to get this a little lower to get you to qualify, because we also have to take in living expenses. Everybody's got to pay taxes. Everybody's got to pay something. You have to. It's not just what's on the credit report. We do have to factor that in, and we try to educate people. And sometimes we got to say, well, this is all we can lend you right now, but you want to work on this and get this paid off. Then you can get that $50,000 vehicle you want. Right now, you might have to start with a used one for $30,000.
Right.
And that's even sad for vehicles.
I remember before the crash, the housing crash, before someone that went and got qualified to purchase a home.
I remember this.
And she told me how much she qualified for. And this was a young person.
Right. That was when they were all interest mortgages.
It was a single
the
mother with
interest-only
children.
mortgages.
And she said how much she was qualified for. And I said, honey, are you listening to them, or are you looking at your checkbook? Because you gotta heat the house. You have insurance for the house. Like, not everything that they're telling you.
You gotta buy food. You gotta eat.
You have to buy food. There are more expenses that come with owning a home than just the mortgage payment. Your taxes go up every year. Can you afford that little? Your homeowner's insurance goes up every year, and not to be a downer, but you gotta have a little leeway there.
Gotta have some cushion.
Yeah, you gotta have some emergency money in a little nest, right?
Yeah,
absolutely.
Like, I know that my two homes that I have bought, they told me I qualified for X amount of dollars, and I said, your paper says one thing, but my checkbook says something else. I still need to be, I want to go to the movies. I want to go out to dinner. Yeah, I don't want to be totally house poor.
Right.
So, my budget says something else. So I used their qualifications, but I stayed within my budget.
Because you're disciplined.
Because I am disciplined.
And you work in banking. Most people don't
I'm
do that.
a numbers person. I'm a numbers person.
Well, actually, and that was something that I think I want to throw back to you now, because that's really important. But how hard is that on your end? Like, you have somebody that they're saying, I can afford a $750,000 home. Now, morally and ethically, does that cause strain for you?
Not really, because and all my agents are the same way. We will literally say to somebody, so here's the thing. This is what your payment's going to look like.
Yeah.
Every month. And it's only going to go up. Now, do you have contingency money put away? I already know you don't, because we've already had these conversations, right?
Yeah.
And so if you spend, let's just say for the sake of argument, you're spending, in some cases, $7,000 a month on a mortgage because they want that house with the pool and the basement and the things. I have it right now, this young couple, their first house, both doctors, which means they have over $250,000 worth of student loan debts. And there's special loans for physicians. You can buy a house 0 down as a physician. Insanity to me. There's a couple of institutions that do it, and they're about to have their first child, and they're buying an $835,000 house. I'm like, they had to have it. Mom was like, look, we got the back end of it. I'm like, all right, well, listen, if you have that, but literally having that conversation, and I'm the elephant in the room person. I'm the person that will go, because I don't want you calling me and saying, I can't afford this house, because I've had that happen to me on many occasions. Nancy needed to sell the house because of, the taxes went up too high. The interest rates, I was in an ARM, the interest rates adjusted, any number of things, a divorce, there's other things that factor into it too. You have to think about your future when you're buying a house. So I talk about generational wealth, but are you buying smartly, right?
Exactly.
So it's funny. My daughter at 28 helped her buy a house, and technically it's my house. She's actually renting it from me for 2 years, and then she's going to buy it as a first-time buyer. I have her on a budget. She knows what her things look like, and we've agreed that she's going to make certain improvements. And we had someone come in because something came up with the electrical line coming into the house. And, you know, one of the guys that came out initially said, oh, it's going to be $5,600 to change out the panel and the this and that. My daughter was like, oh. I'm like, first of all, we're going to bring one of our guys in, $1,400. But just saying, but I literally said, here's how you're going to budget for that. And she's like, okay, well, I was going to take a 10-day vacation. Now I'm taking a 5-day vacation. And I stopped ordering things on Amazon, like little things, right? But she's like, that, she told
wish I
herself
could do that.
no.
She told herself
But it's
no.
like, but it becomes this very
job.
real, because the agreement is, here's what you're paying for rent, here's what your roommate's paying for rent, right? But you're covering certain things. And, you know, and that was an agreement up front. Just like even when you're a renter, you know, there's agreements of what you're going to be responsible for and what the landlord's going to be responsible for. But she's building equity in that house, right? Because, you know, we've got an agreement amongst ourselves, but she's learning really fast. And she's like, I'm eating more ramen than I thought I was going to. So here's the thing. And because she wanted to go buy this or she wanted to go buy that for the house. I'm like, again, you do not have to do it today. And she's like, oh, I went and spent $250 on this, this, and this. And she's like, yeah, I really didn't need it today. And because I just looked at her, she said, I already know, Mom. I'm like, okay. So she now is coming to me and saying, this is what I'm doing proactively. So she's learning in real time.
Right.
And I don't think enough kids get that, right?
Yeah.
Because
Well, see, she has you to guide her, so not everybody has that guidance too.
Right.
And that's why we try to step in when they come in and say, hey, this is what you have to do. And you do it too. Do your clients
true
come
story, right? Mine was a Girl Scout leader. So one of the things as a Girl Scout leader, you take the girls to a bank, right? So for banking, my daughter was so excited to go to the bank. I'm like, why are you so excited? And she was like, because every time you go to the bank, they give you money. And I'm like, you have to put it in first. But this is the perception of a 5 and 6-year-old. And I mean, literally, and all the girls were like, well, yeah, you go to the bank and they give you money. And I'm like, and
you
so
stick a card in the machine, you get
don't
money.
realize where that money goes.
right? And I remember going,
It's crazy.
wow, right?
Yeah.
And too many kids just don't think about what goes into it, right?
Yeah.
So little pieces that are they're fun. They're reality checks too, for big time.
I wanted to thank you for being on tonight. Like, this was an experimental first episode of this, but we definitely want to have you on more often. Like, and I think there's going to be more things to talk about.
Yeah.
You know, as things evolve in real estate, also in financial, like things are always changing, rates are always changing, and we have different other clients that we want to bring on. So I really appreciate your time. Thank you so much.
Thank you.
Yeah, and just if you're looking for real estate, hit up Nancy. If you're thinking about selling, buying, listing, or even want to get a gut check, right? Like
Absolutely.
you're down
Listen,
for all
conversation starts everything. And there's never strings attached to it, right? It's a conversation, and people are so afraid of those conversations. So
if you live, work, worship, or volunteer in Gloucester County, you are now eligible to join the credit union. So you should go in.
Please come see us.
Yeah, come in, say hi, and see what you need. Like I said, I'm speaking from experience, and I truly mean it. Like, I had a great experience working with both of you, and I can't wait to do the next thing. So thank you very much.
Thank you.
Thank you.
thank you.